Okay, let's explore the Huntingdon hurricanes, and this will illustrate unearned revenues. Now I'll read what you see on your screen. Class, let's say our business owns the minor league baseball team known as the Huntingdon Hurricanes. It's now the end of May, and we have previously sold $250,000 of season tickets, all of which were prepaid. Our season runs from April 1st to August 31st, and our team home game record is 16 wins and 6 losses. The season consists of 100 home games. With this information, explain what you would expect to find on the Huntingdon Hurricanes balance sheet, income statement, and cash flow statement that will be prepared as of the end of May related to the facts given, and support your reasoning. Alright, so let me bring this to light. I've worked this ahead of time just to save time in presenting this information. Alright, so here's what we know. The total value of the season tickets sold was $250,000. We know the home games played is 22. We know that the total home games per season is 100. Therefore, if we take the home games played and divide it by the total home games per season, we know that the percentage of home games played so far is 22%. Next, we can compute the revenue earned by taking the total value of the season tickets times the percentage of home games that have been played. And when we do that math, which in Excel, we're going to take the value of C11 times C14, we come up with $55,000 of revenue that's been earned. Okay, next, we can calculate the unearned revenue, which would be the total value of the season's tickets sold minus the revenue earned. Now, we could also calculate that by taking the value of the season tickets sold minus the percentage of home games played. Either way will get you the same answer. All right. Now from there, we can get to what we need to calculate next is what do we find on the income statement, or not necessarily what we have to calculate, but how to answer the question. Well, on the May year-to-date income statement, we expect to find $55,000. Now, they haven't given you when the fiscal year starts and ends, but given that this is a minor league baseball team, we would think the fiscal year is going to end at the end of the season. So if they have played 22% of their games, then they are entitled to record 22% of the season tickets sold as revenue on the income statement. So we expect to see revenue on the income statement of $55,000. Let me slide up, get a little bit more view here. And what do we expect to see on the balance sheet? Well, on the balance sheet, we expect to see current liabilities that are going to be equal to the unearned revenue. And that is given by F. And then finally, I'll slide a little bit more. On the cash flow statement, actually, let me bring one more row to light here. I think I've put it on one row down here. What we expect to find on the cash flow statement would be some dollar amount related to net income. Now, this assumes we're preparing the cash flow statement with the indirect method, which is the method that's typically used. In fact, I've never seen the direct method used once. But on the cash flow statement, we're going to have the first line will be net income, and we don't have enough information to know what the cash flow statement would be with the indirect method. We do know they've received $250,000 of revenues, but you wouldn't find that line item on a cash flow statement prepared with the indirect method. It would be included in net income, which is the first line you're going to find on the cash flow statement. Okay? So I hope you found this to be helpful.